Hi, I'm Mark Steber, Chief Tax Information Officer here at Jackson Hewitt Tax Service. Today we'll cover what you need to know about unemployment benefits and your taxes. More than 30 million Americans claimed unemployment benefits in June, and that's a big number. With the COVID-19 outbreak crippling the economy, that number unfortunately might just keep growing and get bigger. And according to a recent Jackson Hewitt survey, 37% of Americans believe that unemployment benefits are not taxable and not reportable on their tax return. Unfortunately, that is not the case. Unemployment benefits are indeed subject to federal and state income taxes, just like any other source of income. So what do you need to know if you have or are claiming unemployment in 2020? Long story short, state unemployment benefits you receive, as well as the additional $600 a week coronavirus relief provided under the CARES Act, are considered taxable income on your 2020 tax return. That means if you did not withhold any taxes from your unemployment benefits, you could be hit with a big tax bill come next year, or a much smaller tax refund than you're used to getting. There are three main things that most people need to know about unemployment benefits. First, as we've just covered, unemployment benefits are taxable and should be included on your tax return. If you leave this income off your tax return, the IRS will find out and notify you. Don't make this mistake, as it could be costly. You could simply receive an IRS assessment notice, or your tax refund could be held up. Penalties and interest can also compound until the debt is paid. So be sure to remember that this income is taxable and goes on your tax return. Secondly, withholdings work different with unemployment benefits than they do with other wages. There is no automatic withholding. This means you must opt in or elect to have taxes withheld from your unemployment benefits. The catch with unemployment benefits is also you can only request withholdings at a 10% rate. And a 10% rate is often not enough, especially if you qualify for the additional $600 a week federal government subsidy. So make sure to check with your tax pro to determine any additional withholdings you should set up now. And if you don't set up automatic withholdings, then you may want to set aside a portion of your unemployment benefits depending on your tax rate come tax time. Finally, unemployment benefits can impact other tax benefits, like tax credits. Lower income does not necessarily mean fewer taxes. A big problem with unemployment is that it is considered unearned income, so it does not count towards certain credits, reducing their total amount possibly. Many credits are based on specific rules that include earned income versus unearned income to qualify. For example, you must have earned income to qualify for the child tax credit, the earned income tax credit, and the credit for qualified dependent care expenses. In addition, you must be working or looking for work and paying for daycare to get the credit for qualified dependent care credit expenses. Lastly, your adjusted gross income must be below a certain level to get these certain credits. All of these specifics can mean much less or even no credits when tax time comes, which means you could owe more taxes or get a smaller 2020 tax refund. We want you to prepare now so you can get the maximum tax refund you deserve. Unemployment compensation can affect our taxes in so many ways. Schedule an appointment with a Jackson Hewitt Tax Pro for a review of your 2020 taxes and for any additional tax questions on this or unemployment benefits. For more information, visit jacksonhewitt.com.